Breaking news tonight, Russia launching a full-scale invasion of Ukraine.
Russia launches a full-scale attack on Ukraine.
Russia's full-scale invasion of Ukraine.
On the 24th of February 2022, the Russian Federation attacked Ukraine, causing death, suffering and destruction in Ukraine, and leading to a global increase in hunger as wheat supply chains are disrupted. Besides these horrible consequences, the war in Ukraine affects also other areas. One of them is financial accounting and reporting. Hello and welcome to this new video of The Accounting Nerd, your YouTube channel about financial and sustainability reporting. I'm Mario, and today we're going to talk about the 5 major consequences of the war in Ukraine on financial accounting and reporting. IFRS 10, control approach. The war in Ukraine might affect the ability of a parent company to control its subsidiaries, for example in Russia or Ukraine. A parent company controls its subsidiary if all of the following criteria are fulfilled. A. The parent company has power. That means the parent company has existing rights that give it the current ability to direct the relevant activities of the subsidiary. B. The parent company is exposed or has the right to variable returns of the subsidiary. And C. The parent company has the ability to use its power to affect the amount of returns. Military activities in Ukraine, like combats nearby a subsidiary, might affect the parent's ability to use the rights to direct the relevant activities of the subsidiary. But also if a parent company has a subsidiary in Russia, control might be affected, since, for example, due to sanctions, the transfer of money to and from the subsidiary is at the moment difficult or even impossible. However, to evaluate whether control of a subsidiary is still existing or not, needs to consider the individual circumstances of the subsidiary, because the situation of the war, but also the sanctions might change. If control is not given anymore, the subsidiary has to be deconsolidated of the financial statement of the parent company. Impairment of assets according to IAS 36. IAS 36 requires to do an impairment test if there are any indicators, so-called triggering events, that an asset or a CGU, a cash generating unit, might be impaired. An asset or a CGU is impaired if the carrying amount, so basically the book value, exceeds the recoverable amount. The recoverable amount is defined as the higher of fair value less cost to sell and the value in use. Triggering events regarding the war in Ukraine might be significant changes in prices for raw materials, the interruption of business, lack of employees due to military service, exchange rate risks, the damage of assets, expropriation, or the ending of business in a certain country. Most famous in Russia, where many companies stopped doing business there. Provisions according to IAS 37. The war in Ukraine might change certain contracts into onerous contracts. Onerous contracts are contracts in which the unavoidable costs of the contract exceed the economic benefits of the contract. That means these are non-beneficial contracts to the company that have to be considered as a provision. This might be the case due to rising prices of raw materials and energy, or to difficulties with suppliers in Ukraine or Russia, because they have a lack of employees, because many of their employees have to serve in the army. Leasing according to IFRS 16. Imagine a company that leases a building in Ukraine. The lease contract contains the option to extend the contract, and the management intends to use this extension option. Therefore, the intention to extend the contract is also considered in the accounting treatment of the contract. However, due to the war, the company is forced to end its business. Therefore, the company will obviously not use the extension option in the lease contract anymore. This leads to a revaluation of the lease liability and the right of use assets, which includes also the adjustment of the discounting rate. Financial assets. Financial assets might be affected by the war in Ukraine in 3 different ways. Let's look at each way individually. First, expected credit loss. The expected credit loss might increase because debtors are directly affected by the war, or customers of debtors are affected by the war. To determine the expected credit loss, it is necessary to predict future cash flows. However, these predictions consist of high uncertainty due to the current situation. Therefore, it might be necessary to include scenario analysis in the notes of financial statements. Second, fair value measurement. The fair value measurement of IFRS 13 might be affected as well. Due to sanctions from Russia or sanctions targeting Russia, An active market for certain financial instruments, for example Russian governmental bonds, might not exist anymore. Therefore, for these financial instruments, it might be necessary to determine the fair value according to the fair value measurements of level 2 or level 3 of IFRS 13. Third, cash and cash equivalents. Due to the exclusion of Russian banks from the SWIFT system, it might be the case that companies cannot access their cash or cash equivalents at these banks. As required by IAS 748, it is necessary to disclose the amount of cash and cash equivalents that is not available for use in the notes. Thank you very much for watching this video. If you enjoyed it, give it a like, hit the subscribe button and the notification bell to not miss any further videos of this channel. If you want me to produce more videos on specific topics like in this video, please let me know in the comments below. Bye and thank you very much. See you in the next video.